Hello, we are here on one of the rare snowy days in Indianapolis. It's late January 2023, and I'm Chris McCauley with the Strategic Planning Group. As many of you know, we moved from Cambridge to Commonwealth effective November 15, 2022. We couldn't be happier with our move. We're getting a lot of good feedback on the new client portal. I want to thank all of our clients with their patience as we made this transition. With my last update in October, I noticed some really lousy returns in the stock markets, with the major stock markets down over 20%. The fourth quarter was good for stocks, and the bond market improved slightly. That said, it was a very tough year for both stock and bond investors in 2022. Here are the returns for the full year 2022. The Standard & Poor's Index was down 18%. International developed markets, as measured by the MSCI EAFE Index, were down 14%. Emerging markets were down 20%. The Barclays Aggregate Bond Index was down 13% in 2022, as the Federal Reserve increased rates in a dramatic way to fight inflation. As you can see from the chart, 2022 was by far the worst year in decades for bond investors. In 2023, we do expect the Federal Reserve to slow down and possibly end the interest rate increases, and we are optimistic about bond returns in 2023. Bonds are sometimes called fixed income. For the past several years, it's been tough to find decent income. The good news from the rate increases is that we as bond investors can once again earn incomes in the mid-single digits. For those of you who have a good chunk of funds parked in savings and checking accounts, you have better options to earn a decent interest rate. For those of you who have money parked in bank, checking, and savings accounts, you have better options to earn a higher interest rate in 2023. I won't be making any firm economic predictions today. I will say that with the Fed fighting inflation by raising rates, the expectation is the economy will slow down. That's what the Federal Reserve wants to happen. That could result in higher unemployment and a possible recession in order to bring inflation down to their stated goal of 2% annual. Inflation is currently in the 6 to 7% range, but it has been dropping. We recognize that in 2022, it was a very tough year for our clients and their investment portfolios. As you look at the chart on the S&P 500 since 1980, you can see that most of the bars or annual returns are above the line or positive. Last year was not one of those years, but please keep in mind that when you are investing, investors over time have more years of positive returns than negative returns. Unfortunately, as long-term stock market investors, we do have to take the bad years with the good years, and we have many more good years than bad years. Thank you for watching our latest quarterly update. Please follow us on LinkedIn and visit our webpage for more information.